Kunj Bansal is with us. Kunj, hi, morning. Just discussing the Jet story, the fact that it, the stock price and just a whiff of a deal with the Tatas happened, ran up the biggest it has since its IPO. Do you believe this is a story which should be bought?
Sorry, I couldn't hear which IPO you are talking of.
I'm talking about Jet. The move in the stock was the biggest since IPO, but regardless of that, is aviation a story that you would like to buy now, given the turnaround in crude?
No, I think the crude turnaround, see, let's keep in mind that the crude prices which had gone high some time back, let's say about a month back, had gone high only for a period of about 2 months odd or so. Before that, they were anyway trading at around $60, and the 60 to 85 movement lasted only 2 months. Now, even then, till the time the crude price was $60, these companies had not been making any great money. And this has been a historical problem, it's not new, and this has been a global problem. It is not only applicable to the Indian aviation companies. So aviation is a tough sector wherein there is no pricing power. Whether competition goes up or competition comes down by the closure of 1 or 2 airlines. Despite that, on a very broad basis, if I say 15 years ago also, Delhi-Mumbai ticket used to cost 5,000, and today also it costs 5,000, up and down depending on number of days you book and all that. So to that extent, it's very clear that these companies from the aviation sector do not have pricing power, and the variable is oil. So it's a very good trading sector. Of course, Jet probably has gone up on the talks of Tatas looking to buy and all that. Whether that actually is happening or will happen or not, I don't know. But these are very good traders' delight stocks, the whole sector. But a long-term investor has never made money in these stocks.
Okay, Jet Airways, we can argue about the long term, and frankly, I mean, aviation is one sector where the long term money is just not being made. We've been debating ICICI Bank, Kunj. Everyone is now suddenly bullish on ICICI Bank and corporate banks. Is the trade getting crowded, or you think this trade is just started and it has a long way to go?
Yeah, so to answer your question very simply and upfront, I think the trade has just started. There is a long way to go. To extend my point further, also to give you some fact which anyway is well known to everybody, in this market today, when it went down till 10,000 Nifty October end and since then recovered, one of the very few or probably the only Nifty, Sensex or the large cap stocks which is at a 52-week high in last few days. No other stocks has that crown on the head that in such a bad market it's at a 52-week high. I think the underperformance was for long, almost 3 years, of course led by multiple developments. First the market, then the financials of the company on its own, then the NPA asset quality issues, and then the management issues. I think all those are behind now. In valuation terms, if we compare it to the other big names like HDFC Bank, like Kotak Bank, this stock is still cheaper. So I think again in the short term, because it has moved up very sharply, it may come down. So that's for the traders' call. But for medium to long term investors, I think it's a stock which still can give good returns.
Okay, fair enough. Would want your opinion on autos, Kunj, and how would you position yourself among the 4-wheelers and the 2-wheelers currently?
Is that question to me?
Yeah, Kunj.
Yeah, so autos, if we look at the numbers across the different segments, only the commercial vehicles are the one which have been continuing to show good volume growth. Passenger vehicles, last 2-3 months we have seen a sharp deceleration in the growth. 2-wheelers are okay. So I don't think we can take a broad sectoral call of positivity or negativity on this sector. It's more of individual stock specific calls that's going to be applied there. Just to take 1 or 2 names, we have seen Maruti having a significant correction in last few months, maybe a year or so, from the highs of 10,000 plus to currently 7,000 odd, which had fallen even low earlier. I think instead of talking about an overall sector, that looks a good call, because all the negatives are already there in the price. The margin pressure that they were supposed to see because of the rising commodity prices is already there. Part of the reason was currency volatility, which also hopefully should be behind us. Volumes again because of the festival season, Q2, Q3, it keeps happening here and there. We should see some recovery coming in Q3.
Well, I'm just going to turn the conversation narrative back to IT, and let's actually look at the 1 month chart of rupee and the 1 month chart of IT. I know long IT, peak rupee. I think that was like this no-brainer trade for this year, or I won't use the word no-brainer, but that turned out to be the cozy trade for this year, where everyone bought IT with the assumption that rupee is going to go down, US economy is going to do well, and then IT stocks will just continue to march higher. 72 or sub 72 for the rupee. Let's look at the 1 month chart for IT and rupee, and there you go. They just move neck to neck. Yeah, I mean there is definitely a inverse correlation, which is rupee goes lower, IT stocks go higher. Rupee goes higher, IT stocks will go lower. Sandeep, time to get out of a TCS, time to get out of an Infosys, time to get out of mid-cap IT stocks. I wonder that mid-cap IT stocks last quarter, which was a great quarter because of currency, they've not delivered. Persistent, pathetic numbers, Mindtree, poor guidance. Wipro has lost its reputation of being a bellwether ever since they've started, making tall claims and no delivery. Is it time to get out of IT now?
Yeah, people should be significantly underweight on IT. So there are two factors there. One is that the rupee, so rupee normally strengthens a lot in the first quarter of every calendar year, and next year shouldn't be no different because a lot of inflows get bunched up. And on top of that, if we have portfolio flows also reverse due to sentiment change, which could happen, so we could see a more significant appreciation of the rupee in the first quarter of next year. Secondly, the appreciation of the rupee is combining with typically a lean season of growth, because third quarter is a holiday season, number of days of working are less. And on top of that, if you don't have the currency advantage, the results could disappoint even further. So I would say that people who want to hold, they should hold TCS as a core holding, but nothing beyond that in IT. And the second factor is too many brokerage strategists are still recommending IT as the key overweight. And I think that is the second biggest risk, because people are just not changing their view.
Sometimes you talk about contrarian strategy like ulta karne ka, right? Everybody is overweight IT, get out of IT. Everybody is overweight financials, get out of financials. Does it work? I mean, ulta pulta, does it work logically?
So it works at the stage when things peak out. So 2 months back, this data came out that mutual fund holdings in IT was the highest in the last 5 years.
Okay.
So that was the time my view was that this is the topping out of IT. And I tweeted on this also, I remember. So I think so it happens, but you need to let that build up. So not at the start of the move, but at the time when it reaches a crescendo.
ICICI Bank's nowhere close to it, right? Just a reiteration.
No, I think it's the same thing. People are saying they are not buying. When they start buying and they buy aggressively, so which could be a long way off, that will be the time to relook.
Okay. This is the currency picture, 71.94. So you're looking at some stability on the currency front, which is a marked shift from what we were talking. I mean, do you remember exactly a month and a half back we were talking 80, and that could be well in sight for the rupee versus the dollar. That expectation, I'm sure, has been reassessed. So we are moving towards a point of strength for the currency, which is also okay. It may be not so positive for exporters, but given that oil prices are down, it definitely works in well for our import bill. Kunj, what's the approach that you would make towards the oil and gas sector? We've seen a couple of good days for OMCs. Would you build a trade there? And ONGC as well.
Yeah, so ONGC, but on the overall sector, I don't have a great positive call in terms of long-term returns. Again, within that, few qualifications. One, for traders, this sector and these companies are the ones, if they are able to strike it right, not only on the long side, even on the short side, there is a huge amount of money to be made. Within particularly segregating the whole oil space, the exploration, that is ONGC, nothing has been happening. We know that volumes haven't been growing. Prices, they sometimes get advantage, sometimes they don't. We have already seen prices falling down almost 20% from the recent peak. So to that extent, they won't gain. Refining and marketing companies, yes, can gain because of the recent fall in the price. But now, as we all know, the pricing is completely linked. So it's more of a transitional benefit in the intermittent days that they benefit, and some working capital benefit is what they get. Over and above that, as we all know, that there is a big overhang of government decisions or a policy making on this sector, which was seen to have gone away for last 2-3 years. And that's where till about a year ago we saw very sharp outperformance, especially from refining and marketing companies. But some time back again, when government forcefully asked them to reduce the prices, this fear has come back, this overhang has come back. And that has obviously brought down their average valuation, which had gone high in between. So now that fear will again continue to be there. Anyway, let's keep in mind that the next 6 months are a complete election mode in the country. Right now 4 or 5 state assembly elections are going on, and then it will be followed by the general elections. So in that scenario, one cannot have a call that government may or may not intervene again. So I don't think there is any money to be made for the medium or long term investors in these. Yes, for traders it will continue to be another good opportunity in the sector.
Sandeep, we were talking about this M&M's launch of Java, the iconic brand, and whether or not it can possibly eat into the monopoly that RE has been sharing. And in that view, would you still be circumspect about buying into Eicher Motors, irrespective of the decline in the stock?
No, in fact, I've been positive inclined on Eicher after a very long time, since the last month and a half, because I believe that valuations bottomed out. It still has a very strong brand image, and the new product launches could actually help it gain some more market share, because I think they should do well. So we've seen traditionally in the past that Bajaj also tried with its high-end bikes, and a lot of people have tried, but they have found it very tough to make a dent in Eicher's market share. My guess is that it will be the same case this time also.
Okay, brace yourselves for a fairly decent start for the markets and a good performance on the currency front as well. Kunj, I want to revisit the theme of financials and how you're going to be looking at that theme in the near term, especially NBFCs. What's the call there?
So, we have had the result season almost coming to an end, and obviously that has given an opportunity to look into the September quarter numbers of NBFCs in detail, and also the management interactions either on the quarterly calls or even on a one-to-one meeting that we have had with a lot of companies. Clearly the impact of the recent events led by IL&FS default wasn't as visible in the September quarter numbers. So that brings us to the December quarter. The understanding that I have after talking to various companies is that the availability of money or the liquidity is not an issue. The only thing is, whenever risk comes, it's a natural tendency to become hoarders. And that's what had happened. Most of the NBFCs had become hoarders of money, especially in the month of October, September, and as a result significantly reduced the growth targets that they had, significantly reduced the disbursements on a monthly basis that they were doing earlier. Now that is what will reflect in December quarter. It will reflect as a lower growth compared to the earlier quarters, in most of the cases on a YOY basis, in some cases on sequential basis. The other impact that will be seen in the December quarter number is a slight compression in the margins, because the borrowing costs have gone up. So they have tried to pass on, but there is always a lag. Having said that, I think if we take a call on the sector, as we all know that last 3-4 years this was probably a blind buy, especially some of the NBFCs, including the bigger ones and the smaller ones. I don't think now that will be the case anymore. The valuations have already corrected from their highs. That is what something the case will remain. It will not be as fancied or a topmost flavor of the market sector as it was in last 3-4 years, and the focus will shift back to, as they traditionally say, separating the men from the boys. So only the few top NBFCs are the ones which will attract the investors' interest. The interest will fade away from the medium size or smaller size NBFCs or the newer NBFCs. So in summary, it's not a one brush call now anymore.
Okay.